This is the target report for September 2020, and as readers of the target report for the last 9 years will know, at this time of the year we take a break from our monthly review and we take a look back over the entire previous year compared to the year before that. And not only do we count the transactions, but we also categorize them by print segment and then take a deeper dive and look into the rationale behind buyers thinking about why they're completing these transactions. So we're going to move through several charts. I'll try to do this quickly, but if you want more detail, you can go to www.thetargetreport.com, and all these charts and some more rationale and narrative is online behind these. The first chart here is a chart showing the total number of transactions, and the red line represents the prior year, the blue year is the year before that. And you can see that up till March and April, transactions were rocking and rolling. We were on par to have another banner year, and then in March and April, the transactional count fell off a cliff. It's been picking up since then, and we can see in August, we actually had 16 transactions we found that was equal to what we found last year in August. Here's a chart of all the transactions by segment, and we can see very clearly the commercial printing segment is very active, but not as active as the year before. There were less. Conversely, in packaging, there were more transactions this year than the year before, and the other active segment here is publishing, as well as materials and wide format, interesting enough, perked up this year. In the commercial printing segment, we looked at the transactions and what's driving the activity, and still tuck-ins is the primary reason why these transactions are occurring. However, the number of tuck-ins did fall to 50% versus 70% last year in the commercial printing segment. If we flip to wide format, and again, these are categorized by the main service offering of the acquired company, not the acquiring company. We can see a different profile in wide format in that most of these transactions, the logic was an additional facility. There are tuck-ins occurring, and interesting enough, a few years ago we saw very few or almost no tuck-ins in wide format, but this segment is maturing. We're starting to see consolidation occur in the wide format segment. So we dug in a little bit deeper and said, what other attributes to these transactions could we find? And we looked for private equity participation, as well as new owners, geographic logic behind these, and we can see here in wide format that private equity is very involved in this segment now, and we even found 3 new platforms, meaning private equity companies that have acquired a company large enough to then bolt on additional companies in the future. In packaging, totally different picture. What we have here is not only did the number of transactions increase, but the logic is very different in the packaging segments. And it's primarily additional facilities. There's a lot of companies rolling up the packaging industry and the various products that are produced. And we see that through the data we found in the last year. Well, and then we also looked at what's the private equity participation, and in packaging even more so than wide format. And in commercial printing we found none. So we didn't even do a slide for commercial printing in this regard. So private equity was 9 of the transactions. We had geographic logic being behind 9 of the transactions. New platform. We did find 1 new platform in the packaging segment. Not as many as you might expect, because when these companies come on the market, there already is enough participation by financially backed sponsors that there's active participation in going after these targets, and so therefore there aren't a lot of companies available for new platforms to be formed. Packaging segments, we also then split them out to see where is the activity within the packaging industries, and by far the activities in the label segment. Corrugated, also some activity, as well as folding cartons. Direct mail companies, this year we split out the direct mail companies. Last year we focused on mailing service companies, but we took a little bit broader view in direct mail companies to look at direct mail companies this year. Again, different profile than the more generalized commercial printing segment. Additional facilities, there's definitely expansion. So there's a sign of good, robust activity in the direct mail segment. And looking behind this, we also see private equity involved in direct mail, and we found 2 new platforms that were formed over the last 12 months in the direct mail segment. We also take a look at the financial distress within the printing industries, where the bankruptcy filings and the non-bankruptcy closures of plants. And we can see clearly, not surprisingly, commercial printing is where the majority of bankruptcies have occurred in the last 12 months. However, we see a fall off from the prior year. Now this data is for the 12 months ended August 31st. So even though we're expecting due to COVID-19 some more distress, particularly within commercial printing, it has not shown up in the bankruptcy filings yet. And of course, we see also publishing with all the distress and the churning in the newspaper and magazine publishing segments. And last but not least, we also chronicle non-bankruptcy plant closures. These can be not just the closure of a company, but also larger companies that are consolidating facilities. And it would include, in this case, the closures that LSC announced of their plants prior to their bankruptcy filing. So again, indicative of where there's activity and financial challenges. And no surprise, again, commercial printing, far and away, the most distressed of the segments. That concludes our Target Report interview for this month. Hope you will join us next month.